let's go over this. All right, Gerald, let's roll this. So what we have here, guys, is we have these. There we go. We have these liquidity grab demand and buy demand. Here we go. Liquidity grab, demand, and supply zones. All right. Now I have three settings. This is an indicator. This is an indicator where I showed you how to set up on the last video. This is showing my 100 and 200 deep liquidity grabs, where these are accumulated liquidity grab buy and sell zones where they like to bring it back to, and they like to reverse price, or they like to do a continuation like this when they break and retest, like they did this morning here at 8:30 this morning. They did off this previous liquidity grab zone. So let's take a look at these. I showed you how to set this up on the previous video. You members know how to set it up. Go to the members download page and you can set up these exact settings. The indicator is called the Sim Outer Edge, and we use a 100, a 200, and a 25 setting on our Sim proprietary Sim Renko bar type to get these levels. These levels will be exactly set up like you see right here. What you'll want to do, I'm using a 1-130 chart, but to show fresh levels, which we're doing here this morning, I showed the NYMEX Metals RTH6. That's going to show fresh supply and demand liquidity grab levels starting at 8:30 in the morning, and it produces fresh levels for you all the way to around 1:30. After 1:30, you'll want to switch to a 24/7 chart if you want to see trades from 1:30 into the close. I like doing this chart like this, a NYMEX RTH6, because it only shows fresh levels that start trading at 8:30 in the morning. So yesterday we started trading at 8:30 in the morning. 8:30 in the morning, you're going to see it start trading fresh levels. This is my 25 setting. It had some nice singles. Derek, that's what you were getting yesterday. Derek, nice job yesterday. 4 for 4 on these 25 settings. Great job. And then what happened was it went into these deeper settings. So I have 3 settings. I use a 25, 100, and 200. Everything's pre-built into my indicator to pick up these levels. So these were my deeper levels, deeper liquidity grabs, where there's a big distortion in price. The market likes to bring them down to these levels, and they like to use the levels as a continuation to the upside or downside. So when you see this, when you see these levels come into these levels, these are major possible reversal points. So this is a buy. This is called a buy demand, buy liquidity grab level. You can see how it's static all the way into today's trading session. And we had a major reversal here at 10 o'clock yesterday. It comes down, and then it shoots up, had a nice little big move up from 36.5. Swing high was what, 83. Big S&P point move. These typically run or an average of 10 to 12 points within around a 15-minute window getting into these zones if they're qualified. So when they come down to the zones and you break this zone, let's say you break the zone and do not get a reversal candle, that means they're trying to get down to the next zone. So you look for a retest of that zone, and this is now old demand becomes new supply liquidity. It came right into it by one candle, and it went from 46 short all the way down to 31, almost a 15-point short in a matter of not even, 6 minutes? Yeah, 7 minutes. Then it comes down to my big liquidity demand zone. We're looking for a major bounce out of the zone. You get the reversal candle confirming the zone can hold. And then it proceeds to move, 39.25 on the first push up to 51, 11-point push. It comes down again, 12.52, touches my demand zone. Once again, we get a rally into the close, 40.5, all the way up to 60, a 20 S&P point move. So you can see that these demand and supply zones are very, very key, because what they do is they show you where major support and resistance can be for major reversals. When you get down these accumulated liquidity grab buy and sell zones, major possible reversals can happen. Now, old supply becomes demand. So we had non-farm payrolls come out today, and look what they did. They broke it out of the old supply that reversed the market here yesterday at 12.13. That's how accurate these liquidity grab levels are. They touched it right to the zone. They touched it and they ran the market from 64 3/4 at 8:30 all the way up to 99 and pushed the market up almost 40 some odd S&P points up from this zone. It came right down to the zone and touched. So you want it to touch the zone or actually get into the zone. So when we're looking at this, let me blow these up. So you can see this morning at 8:30, it closed right inside the zone and gave us a reversal candle. And on all these zones, it does the same thing. You want to come down inside and touch or close and then get the reversal candle. I'm using a 1-1-30 chart, 1-1-30 Uni Renko, because I want confirmation that we're going to reverse out of these zones. And then what you can do is you can use our automated sim tick strategy if it's with zone trend to pop in the trade. I showed you how to do that on the last video. Or you can use Chart Trader to fire in these trades for the move. But you see how these zones, when you close inside of them, then you're looking for a reversal inside of the zones. All right. When you come down to a zone and you do not close, meaning you do not get a reversal candle, because we should see an immediate reversal inside the zone. We should see a green reversal candle. If it closes outside of it, there's no trade. You're going to look for a market to come down, either retest this zone, which it did, close inside of it, give us a reversal candle for a nice big hit within 7 minutes, 7-8 minutes, 46 down to 31, 15-point S&P point hit. And if it doesn't retest that, you're coming down to the next zone. It comes down to the next zone. This is why this is relaxed trading. It comes down, gets inside the zone, closes inside of it, which qualifies it. And then we get the nice reversal, 39 1/4 all the way up to 51 for another 11-point run. So when you can tell when you break, so when you're doing liquidity grab trading, there's called market structure. If market structure is broke, that's this outer edge of the zone. If market structure is broke on liquidity grab trading, that means they're trying to take it down to the next zone. All right, they're trying to take it down the next zone, which they did. They brought it right down to it, and they brought it right straight up. All right, so market structure tells us everything of what's going on. So this actually came down to it, and on our first, it tried to come down to, after news yesterday, it tried to do it twice. I don't even like this because it closed 2 candles below the zone, then a reversal candle. This is an aggressive entry. I prefer, and it came down within 1 tick here and reverse. I don't even take these because I know how accurate these zones are. They should come right inside this zone by a candle close, not break the market structure by a candle close, and it should reverse right exactly inside the zone, which it did. All right, into 36 3/4, almost 37, big move up for another 14, 15-point move up in less than 7 minutes on that one also. So I don't even like it violating by even 1 close and then get a reversal candle. You know, it should come right inside the zone and reverse. All right, now you get these shallow retracements also that happen here. This is my 25. So if I come in here to my indicator, I have them set twice to my Sim Renko type. I have 100 and 200. I can enter my indicator in again. Now yours is called Sim Outer Edge. You can enter it again, add. I can put 25, Sim Renko, put 25. This is for shallow liquidity grabs. They're very, very effective yesterday if you're not going to get deeper retracements. So 0, I use my proprietary zone. We back tested for 30 years with an AI program. So this is our best zone. We hit apply. Now you're going to get these shallow zones, not the deeper zones, where they like to still pull the market back. They'll still pull the market back, but they're not pulling it back deep. So now we got these shallow zones, still the same trades. So now you see these shorter you have more zones to play off of. The key is this: if you look in the shallow zones, they're active by going forward, meaning if it comes down into the zone, that's a buy, buy, buy. The runs are still nice, 42.5, high as 51. Comes down to this buy zone here. You can see how you can project them forward. This another buy zone. Never made the team there. Got a sell zone here. So you can use, if you want more trades, you can use our 25 setting and get into the buy and sell zones from there that are more geared towards shorter profit targets, right? That's a sell zone right there. So here's a big buy zone. See how it never came down to the longer buy zone, but this was still a buy, because there's my 25 setting, and you got to reverse right inside of it. Reverse right inside of it, and this market just cranked to the upside. See how it blew right through the sell zone, cranked, and it just got to start moving up. This is a great buy on the 25, 42, ran to 82, went 40 S&P points up just off this 25 buy zone. All right, then it comes into the sell zone, and we get a big sell. Started that big sell down to our larger our larger buy and sell zones. So you can see how effective this is. This works on all markets right across the board. Whether you be if you do, let's say you're trading the Dow or the RTY, I really like those two on this also. They work really, really well with the 830 to 130 Renko size. If you look at the Dow, same thing. It likes to pull back to these big key levels. Here's the Dow, same setting, same chart. This is a 1-130 chart. I like putting the Dow, the Russell 2000, RTY, and the S&P beside each other. They'll come down to these zones. So here's my two zones, right? And check how accurate these are. Get a lot of big, comes right down to the zones. That's a nice buy zone, and the market gives a nice little big move up to the upside. Here's another buy zone. Comes right down to it. Market moves to the upside. So you can see, no matter what market you trade, it's still the same zones. Buy zone here, big trade on the YM. They love these accumulated to bring them down. The algorithms, remember, these are electronically traded markets. These automated algorithms love these zones. They love these zones. We're right with them because they leave their footprint. These automated algorithms leave their footprint. That's how we're able to do this with indicator and strategies. We know where the accumulated liquidity grab zones are based upon they left their footprint in the past. And I was able to program these to find the levels where these automated algorithms like to bring these markets. So you can see the opportunities in the Dow here, big move here. This is a big 40,941, 41,039. I mean, just really nice, big moves. That's almost a 100 tick move just on that push up. So no matter what market you look at, and these are just the deeper zones. My deeper zones are my favorite liquidity grab zones because that means the market's pulled really back a long way. It's pulled back a long way, catching all these counters taking them. Then all of a sudden the counters jump in. They're taking an order flow, taking liquidity, order blocks, buy, 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 order blocks. You see a big increase of volume when you're getting near the zone. They come in the zone, big reversal because this is an accumulated. They're buying on the way down. They get to the zone. That's an accumulated liquidity grab zone where it should reverse, and you see a major possible reversal, 100 ticks, right outside the zone. So it's a neat little way to look when these markets are coming in and getting these different buy and sell zones are great levels to buy off of. So if we look at the last buy, because the market's in an uptrend, this is a buy zone. So it came down to the buy zone. Here's our buy zone. It's got to close. This is a trade a second ago at 10:20. It's got to get inside of the zone. Then it's got to give me a reversal candle, which is a V bottom. There's your V bottom. So there's your V bottom. Now what you can do inside the zone, blow this up so you can see it. When it gets inside the zone, you can use the automated strategy only for zone trading. So let's say you want to cherry pick the zone trades only for the automated algorithm to get you in and manage your position for you. Like right now I got a $350 stop and a $350 target on the strategy. If you look at the strategy, it's on my other chart, but it's a $350 stop, $350 target per one contract. So when you get inside the zone, you can turn it on and let the strategy get you in. It will take the first liquidity grab. If you want it, let the strategy do it for you. It'll take the first distortion of price, first liquidity grab, get long at 94.5, got out at 01. But that's what you want to see. You want to see it get inside of the zone, and you want to see a reversal. We just had a trade right there. The potential in that one was 94. You can get it right into the V bottom if you want. 94 got as high as 04. What did it say it likes to run? What do I say it likes to run on these, even these shallows? 10 to 12 point average. How many minutes did it take? This one was a V bottom at 10:24. What time is it? 10:31. 6 minutes. I showed you yesterday's trades. Those 10, 12, 15 point runs. How many minutes? 7 minutes. I'm seeing these demand. You see a big possible reversal coming inside these zones. You just need confirmation with the V bottom or V top. It's usually, like I said, 6, 7 to 10 minutes. You're looking for a 10 to 12 point move in the markets. All right, that's the average when these zones are hit. So now what we're doing, it came close to the zones here. It does not qualify on these shallow zones, so we don't play them. But you would want the market to come down here eventually today. You'll want the market to come down inside of these deeper zones here. You'd like to see it come down. This zone or this zone, get a reversal candle, just like we saw yesterday on those big moves, and get a V bottom and see that market crank to the upside. So this is valid through the whole trading day. To show you what it looks like on this chart, this is valid for the whole trading day. We're looking for the push up in the market. When we get down to these deeper zones down at this level, we're looking for a move. We're looking for a move where it comes down like this. Here's the 8:30 news. It comes down inside the zone and gives us a reversal bar, reversal candle. Same things happened yesterday. Look at the buy zone. Came right down to it. Buy zone, major buy zones right there. Major buy zone came down to it yesterday. And then you get that big major reversal and the big pop in the market. So it's every day like this. You're going to get these major buy zones. Here's 10 o'clock, major buy zone, major reversal, major buy zone, major reversal, major buy zone, major reversal. So you get these big zones that are hit on these fresh lines that come up. So when these fresh lines come up, there's a major reversal 10:52, major reversal at 10 o'clock. So when they come up, here's a major sell zone. Just remember, old supply becomes new demand, old demand becomes new supply. This is a major sell we had this week at 8:35. What was this? 8:36. If you're coming down to a major demand liquidity zone and they break it and they don't close it inside of it, then they retest the zone. And it does not close outside. The market structure does not close outside of that zone. You got yourself one heck of a trade. And sure enough, this was 31.5 all the way down to 02. Fell 30 S&P points, right? So you want to make sure that you wait for these zones to hit. If you're looking for major possible reversals, we'll leave, 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 that on all day today. Gerald, go and shut that off. So you can see that this is this morning at 8:30. This is the major buy zone. It hit a 25 here to get the marker going up. So if I look at the buys that happened today so far, here's my deep zone, deep buy zone there. There's my 25 zone buy here. That happened at 8:35. Started that big move up. That's the time you usually want to look for trades anyway after news. We had another zone buy, 25 buy zone here. Then we had another, now we're waiting on another buy zone. So we haven't had a deep pullback yet, guys. We haven't had a deep pullback yet to these zones. Now these zones will adjust up. So don't think they're just going to stay here at 61 all day. If the market breaks to this high, they will adjust up.